Good everyone, and welcome to another amazing session of the Elite Tutor, where learning is made absolutely simple. And in today's video, we are going to look at the concept of taxation. And I want you to follow closely. We are going to look at the definition of taxation. We are going to look at the various systems of taxation, and we are going to look at how to solve WAEC questions involving taxation. Now, when we hear taxation, what do we mean? Now, taxation can be defined as an act or the process of imposing a compulsory levy on citizens or firms or even goods and services within the country. That is the definition of taxation. Now, there's a difference between taxation and tax. Tax, on the other hand, is the compulsory levy that is imposed on citizens, that is imposed on firms or goods and services within the country. Now, what distinguishes taxation from tax? Taxation is the process, taxation is an act, but tax is the compulsory levy that is being imposed. Now, in this video, we are also going to be looking at the systems of tax. Now, when we say the systems of tax, we have three systems of tax. We have the proportional system of tax, we have the progressive system of tax, and we have the regressive system of tax. Now, I want you to follow closely because there are times when you'll be asked to solve a certain question, and then from that question, you'll be asked what system of tax. So the knowledge on the system of tax is very, very important. Now, let's look at the first system. Now, we have the progressive system of tax. Now, what do we mean by the progressive system of tax? When we say tax is progressive, we are simply saying as the income of a taxpayer increases, what happens to the tax rate? The tax rate also increases. As income increases, the tax rate increases. Now, when we say proportional system of tax, we are simply saying irrespective of the income, the tax rate remains the same. If income increases from $2 million to $10 million, what happens to the tax rate? The tax rate remains constant. And then finally, the last system of tax we have is the regressive system of tax. Now, what is this regressive system of tax all about? The regressive system of tax tells us that as the income of an individual increases, what happens to its tax rate? This tax rate reduces. And this regressive system of tax doesn't favor the low income earners, because as the income increases, the tax rate reduces. And finally, for this video, we are going to be looking at a standard question that's going to help our understanding on the calculation of tax. So I want you to follow closely. Now, we have this question. This question comprises of three income earners. We have Mr. Okafu, Alhaji Tanko, and Mr. Kolawole. And then we have their various income base, and they also have their various tax payments, both for X and for Y. Now, let's look at this table. Let's look at now what we're meant to solve in this question. Now, the first one, we are asked to determine the percentage rate of taxation paid. We are asked to ascertain the percentage rate of taxation paid by Mr. Okafor in column X and column Y, Mr. Kolawole in column X and column Y, and finally Alhaji Tanko in column Y. Now, in order for us to determine our percentage rate of tax, so they're simply asking us for the tax rate. Now, in order for us to determine that, we need to know the formula. And the formula is simply our tax payment over our tax base. Now, let's write. We want to calculate the percentage rate of tax. The percentage rate of tax. Now, the formula for calculating the percentage rate of tax is simply our tax payment over tax base. Our tax payment over tax base multiplied by 100 over 1. We have multiplied by 100 over 1. Don't forget, our tax base is also known as our income base. Our tax base is also known as our income base. So in order for us to ascertain the percentage rate of tax, it's simply our tax payment over our tax base, which is the same thing as our income base multiplied by 100 over 1. Now let's solve for the following income earners. Now we have the first one, Mr. Okafor. We have Mr. Okafor. So we are asked to calculate for column X and for column Y. Now for column X. Now for Mr. Okafor, for column X, his tax payment is 1,000 naira, 1,000 naira. And his tax base, which is same thing as income base, is 10,000 naira. Multiplied by 100 over 1. Now let's confirm that from our calculator, what that's going to give us. So we have 1,000 divided by 10,000 multiplied by 100. So that gives us 10%. So for Mr. Okafor for column X, his tax rate is 10%. Therefore, since same Mr. Okafor for column Y. So we have for column Y, we are going to repeat the same process. His tax payment is 800. His tax base, which is income base, is 10,000 naira multiplied by 100 over 1. So we're going to have 800 divided by 10,000 multiplied by 100. So this gives us 8%. So for column Y, Mr. Okafor tax rate is 8%. Now, same process we applied for Mr. Okafor is same process we are going to apply for Mr. Kolawole. Now, let's go ahead. Now, it's important for us to solve for the three of them. Why? That will help us to ascertain the system of tax that is involved. Now, let's solve for Mr. Kolawole. So we have for Mr. Kolawole. For column X, Mr. Kolawole, his tax payment is 1,500. So for Mr. Kolawole, we have 1,500. So permit me, we made a little bit of mistake. The 1,500, it's not for Mr. Kolawole, it's for Alhaji Tanko. So let's correct that. So this is the second tax earner we have, it's for Alhaji Tanko. So for short, let's just call Tanko. So for Mr. Tanko, we have the tax payment 1,500 and the tax base, which is the income base, is 15,000 naira multiplied by 100 over 1. So if we convert that from our calculator, so this gives us 10%. And don't forget, this 10% is for column X. Now let's do the same thing for column Y, still under Alhaji Tanko. So see for column Y, under Alhaji Tanko, the tax payment is 1,300. Our tax base, which is our income base, remains the same, 15,000 multiplied by 100 over 1. So this gives us, let's confirm from our calculator, 1,300 divided by 15,000 multiplied by 100. 1,300 divided by 15 multiplied by 100. Now this gives us 8.7, which is approximately 9%. So we do this on our calculator, we're going to have about 8.7, which is approximately 9%. And finally, for our last income earner, which is Mr. Kolawole, which is Kolawole for short. So we want to calculate his tax rate both for column X and for column Y. So for column X, we have that this is, his tax payment is 3,000 and his income base, which is his tax base, is 30,000. Multiplied by 100 over 1. So let's confirm that from our calculator. This gives us 10%. And then for his column Y, his tax payment is 1.5. While his tax base, which is income base, remains the same, 30,000 multiplied by 100 over 1. And this gives us 1.5. And this gives us 5%. So you can see that we've been able to calculate the tax rate for our various income earners from Mr. Okafor to Alhaji Tanko to Mr. Kolawole. And don't forget, the formula remains the same. It is our tax payment divided by our tax base. And another name for tax base is the same thing as income base. Why is it called tax base? It's simply the income that your tax is being charged on. So, and multiplied by 100. So we've been able to comfortably solve the tax rate for both column X and column Y for each of the tax earners. Now we move to the next question. Now we move to question B. Question B says, identify the systems of taxation employed in column X and column Y. Identify the systems of taxation employed in column X and column Y. Don't forget, during the beginning of this video, I explained that we have three systems of tax. We have the progressive, we have the proportional, and then we have the regressive. Now, let's look at our column X. For column X, from Mr. Okafor, we have 10%. Column X, from Mr. Tanko, we have 10%. And for column X, from Mr. Tanko, we have 9%. Now, what can we say? For column X, from Mr. Tanko, we have 10%. Column X, from Mr. Tanko, we have 10%. And for column X, from Mr. Tanko, we have 10%. So we are identifying the systems of tax. So Mr. Okafor, column X, we have 10%. For Mr. Tanko, column X, we have 10%. And for Mr. Kolawole, for column X, we have 10%. Now, I can comfortably tell you that we have a proportional system of tax here. Why? Irrespective of their income. Now, let's look at their income. Mr. Okafor here is 10,000. Mr. Alhaji Tanko here is 15,000. And Kolawole is 30,000. So irrespective of their income, what is happening to their tax rate? Their tax rate remains the same. So we can say that the system of tax employed in column X is a proportional system of tax. And for column Y, what system of tax is employed? Now for column Y, for Mr. Okafor, we have 8%. Please take note of the rate. 8% for Mr. Tanko. For column Y, we have 9%. And finally, for Mr. Kolawole, we have 5%. So what can we say? What system of tax can we say here? Now I can comfortably tell you that this is a regressive system of tax. Why? A regressive system of tax, it tells us that as the income increases, what happens to our tax rate? The tax rate reduces. Now let's look at it. When the income of Mr. Okafor was 10,000, for column Y we had what? For column Y we have what? 8%. Now, when the income of Mr. Okafor was 15,000, for column Y we had 9%. And for Mr. Kolawole, when it was 30,000, we had 5%. Now, some will ask, why is it that when it was 10,000, we had 10%, and then it increased to 15,000, we are now having what? 9%. Now, when we make this conclusion is not just from one particular tax. It's not just from one particular tax rate. We look at the three. When it was 10,000, he was paying 8%. Now also when it was 30,000, you can see that what he was paying was 5%. So if you look at it, the majority shows us that this is a regressive what? Tax. And also if you also look at Mr. Laji, when it was 15,000, he was paying what? Don't forget this 9% is an approximate what? Value. He was paying about 8.7%, which is not too far from what the previous one. The previous one, which is what? At what? 10,000, which is what? At what? 8%. So we can't call this a progressive, neither can we call it what? A proportional. Because progressive, as the income is increasing, what is happening? The tax rate is what? Increasing. Because when it increased to 30,000, it was paying what? Lower. So the best system of tax that is employed here is a regressive system of tax. And then we have the next question. They said, which of the income earners has the least burden under column Y? So we have our income earners. So let's look at that column Y. Mr. Okafor was paying 8%. Mr. Okafor 8% tax rate. Mr. Tanko for column Y is paying 9%. But Mr. Kulawole was paying 5%. So our income earner with the least burden of tax. When we say burden of tax, we are simply looking at where the tax, where we are looking at who pays the final tax. We're talking about the burden of tax, where the final tax was rests. And that can be seen under the concept of incidence of tax. When we talk about incidence of tax, we are looking at the burden of tax, where the burden of tax finally rests. Is it rested, does it rest on the producer or does it rest on the consumer? So from our calculation, we can see that Mr. Kulawole under column Y is paying 5%. And moving forward, we have this question. This question says, if the government increases its flat rate of taxation to 20% flat rate, how much revenue will be generated from the payees? How much revenue will be generated from the payees? Now you can see that in this particular question, there is a fixed tax rate that is being given. And we are going to be calculating this 20% on the income of our earners. And then we will now be able to ascertain how much is being gotten from the government. Now before we start solving, I would like to say something. Now, in order for us, please, most students, they make mistake with the amount that is being generated by the government and the disposable income. The disposable income is how much that is it's how much that is remaining after our tax has been deducted from our income, and that disposable income is the amount for our income earners. While the amount that is being generated, it is the monetary value of the percentage. Please pay attention. When we say amount being generated from the government, it is the monetary value of the percentage. It is possible that 5,000 can be seen as 5%. 5% tells us the rate, but 5,000 is the monetary value. So when we're looking at how much is generated by government, we don't want to look at the percentage, we are looking at the monetary value. And in order for us to calculate it, it's simply our 20% on each of these income base. And I want you to follow closely. So let's solve. Alright. Now we are going to be looking at C. We want to calculate how much revenue will be generated from the payees. And this money that is being generated from the payees goes to the government account, which is tax. Now let's look at for Mr. Okafor. We have for Mr. Okafor. Don't forget we have a flat rate of 20%. So in order for us to calculate how much will be generated by the government, this gives us 20 over 100 multiplied by his Mr. Okafor's income base, which is 10,000 naira. So we calculate 20% of 10,000 naira, 20 over 100 times 10,000 naira, that gives us 2,000 naira. So this means that from Mr. Okafor, the government will generate 2,000 naira as a result of their 20% flat rate. And we have for Alhaji Tanko for short, we have 20% over 100 multiplied by his income base, which is 15,000 naira. 20% divided by 100 multiplied by 15,000 naira. This gives us 3,000 naira. So this tells us that from Alhaji Tanko, the government will generate 3,000 naira as a result of the 20% flat rate. And finally, from Mr. Kulawole, at 20% flat rates, his income base 30,000. So we have 0.2 multiplied by 30,000. And this gives us 6,000 naira. So we can see that at 20% flat rate, these are the various income, these are the various revenue that will be generated by the government. The government generates 2,000 from Mr. Okafor as a result of 20% flat rate. The government generates 3,000 from Mr. Tanko as a result of the 20% flat rate, and also 6,000 naira. And then finally, let's look at our last question. At 20% flat rate of taxation, calculate the disposable income of Mr. Okafor, Alhaji Tanko, and Mr. Kulawole. So when we say disposable income, it's simply their income base minus, it simply looks at the difference of their income base and the 20% tax. So their income base, now for Mr. Okafor, we have that his income base is 10,000, and the 20%, the monetary value of the 20% is 2,000. So let's calculate that. But first of all, let's go to the formula. We want to calculate that disposable income. Disposable income. This gives us income. Income base minus tax rate. Minus the tax rate. So we have for Mr. Okafor. So for Mr. Okafor, his income base is 10,000 naira. His income base is 10,000 naira, and the tax rate at 20%. Why are we using this 2,000? Because they say at 20% flat rate. So the 20% we saw gives us 2,000 minus 2,000. So the disposable income of Mr. Okafor is 8,000 naira. So that's how much he's taking back home after paying the government. And secondly, we have Alhaji Tanko. Alhaji Tanko's income base is 15,000 naira, and at 20% flat rate is 3,000. So for Alhaji Tanko, his disposable income is 12,000. And finally, we have Mr. Kulawole. Mr. Kulawole, his income base is 30,000, and at 20% tax rate is 6,000 minus 6,000, and this gives us 24,000. So these are the various disposable income from the different income earners. We've come to the end of this video. Hope you like this video. Please ensure you like, share, and subscribe to this channel. Thank you very much. See you in the next video.